If you want to make use of technology to rebalance your portfolio intelligently and quickly, you need to know this about Pies from Trading 212. Hey guys, I'm Jasper, a financial market analyst working with Trading 212 to help improve your financial education. Please note that nothing in this video should be construed as financial advice. By making smart use of features like AutoInvest and fractional share ownership, Pies allow you to set up a portfolio that matches your investment approach and then just simply sit back and allow Trading 212 to channel your regular cash deposits into your personalized pie. But every so often, your pie, and in fact any portfolio, might need to be rebalanced. What is rebalancing? On a practical level, rebalancing means buying more of and selling some of the stocks that you own to get the weightings back as you originally planned them. If you invest £1,000 into 10 stocks and allocate 10% to each stock, you might rebalance when one of your stocks becomes worth 11% of the portfolio because its price has gone up by selling some of that stock. At the same time, another stock is now worth only 9% of your portfolio because its price has either fallen or not risen as much as the others, so you rebalance by buying some more of it. Returning to an old theme when it comes to pies, it simply cannot be overemphasized how important it is to be diversified in your holdings. When your portfolio falls out of balance, quite likely it has become less diversified too. Rebalancing is not just a matter of sticking to your planned allocations, but a matter of keeping the same level of diversification. You can also do some tactical rebalancing. This is where you decide to invest in more of a certain type of stock and less of another because of, for example, a change in the macro environment. I talked in my other video about investing in defensive stocks when there's a recession. In this case, you would rebalance by increasing the weight of defensive stocks in your pie. Okay, so how do you rebalance? I'll answer that in two parts. Firstly, I'll talk about the 4 main ways to diversify your pie. Then secondly, I'll finish off with how to rebalance it in the Trading 212 app. There are 4 metrics by which a portfolio needs to be diversified: geography, sector, size, and asset class. Geography. Although it's an increasingly interconnected world, countries are still different and have different business and economic cycles. If you're a UK-based investor using Trading 212, you will probably have some London-listed stocks included in your pie. But the investable universe extends far beyond the London Stock Exchange. Even if you believe the UK is the best country to invest in, investing perhaps just a smaller amount overseas adds some diversification. For example, when the UK goes into recession, this drags down the value of UK stocks. If at the same time the US or continental Europe avoids recession, the stocks listed there should fare better. In essence, a pie that was composed entirely of UK listed stocks is overly exposed to the risk that the UK market performs badly, whereas a pie that is diversified to contain UK alongside US, European and Asian stocks would be considered much more geographically balanced and less exposed to the risk of one region underperforming. Sector. Another axis around which your pie will need to be arranged is how exposed you are to individual sectors of the economy. For instance, over the last 10 years, tech stocks have proved to be some of the best investments. Whether or not that will continue to be the case for the next 10 years is a matter of debate, and individual investors will naturally have differing views on this. Assembling a pie with either no or very few tech stocks would be a rather extreme position to take. Likewise, investing into a pie that only contained tech stocks would violate the principle of diversification. You can also increase or decrease your exposure to a sector depending on the performance of particular companies. If you had, let's say, 5% of your pie in shares of BP and Shell, but you see oil prices staying stubbornly high, you might perhaps choose to raise their allocation. Likewise, if you want to decarbonize your portfolio, you might instead choose to lower your allocation to fossil fuel companies. Rebalancing to ensure that your pie reflects your expectations about how different sectors and companies within these sectors will grow in the years ahead is a duty every investor needs to attend to. Size. I think you're probably already familiar with the idea that large blue chip companies are more stable and can be one of the best sources of long-term investment returns. I've certainly talked about it in the Trading 212 series on videos about dividends. The other end of that scale is smaller, usually newer companies that on average grow faster and are some of the best opportunities for capital gains. Another way to describe these are large caps and small caps. Then in the middle, naturally you have mid caps. In the context of pies, it's good to have a blend of large, medium and small companies to give you diversification in size. Asset class. Lastly, a pie should be diversified to ensure that it can capture the performance of a range of different asset classes. Of course, there are exceptions, and some move more or less than others, but stocks tend to move in the same overall direction as each other. For that reason, it's good to own things that are uncorrelated or negatively correlated to stocks. If the stock market is falling, maybe the housing market's rising. This is much simpler than it once was because of the existence of ETFs. Now you can get exposure to alternative asset classes all in one account. For example, gold has always been a popular way of diversifying a portfolio, ensuring it has some protection against inflation. However, very few of us will ever directly own gold because of the difficulty in buying, transporting, and storing lumps of a precious yellow metal. Fortunately, there are several ETFs on the market which track the spot price of gold or gold mining stocks for very low fees. Commodity, real estate, or fixed income ETFs can be purchased on the Trading 212 app and included in Pies just like anything else. The simplicity of the Pies feature means that everyone can design a well-balanced and diversified portfolio. In combination with the AutoInvest function, once your pie is up and running, the cash you invest will be split up and allocated to your chosen investments in exactly the ratio you have specified. Whilst there will be times when you want or need to rebalance your pie, this can be done quickly and easily within the Trading 212 app and is always available as an option for those who see opportunities they want to take advantage of. This decision ultimately comes down to personal opinions, but there are some key indicators to look out for that might suggest it is time to rebalance your pie. This list is not meant to be exhaustive, but rather to provide a few starting points for you to consider when debating how you should rebalance your pie. Long-term trends. More investment going into, for example, renewable energy and green technology has certainly gathered pace recently, and it feels as though a watershed moment may have been reached. Although there is still a great deal of uncertainty about how we will supply businesses and households with energy in the future, a clear long-term trend towards more renewables can be identified. Investors may, accordingly, want to allocate more of their pie towards companies with good environmental credentials, either individual stocks of renewable energy companies or to ETFs which track the whole sector. Global events. The COVID pandemic reminded us all how important healthcare provision is. Governments demanding the mass rollout of specific healthcare requirements benefited some pharmaceutical companies. Likewise, the travel restrictions were a huge blow to travel companies. Moving in and out of stocks based on news is more like trading, but you still need to be able to recognize when the news means there will be a long-lasting change. Warren Buffett famously sold all his airline investments in 2020 for this very reason. Removing zombie stocks. There are companies that only survive by rolling over debt obligations with low interest rates. These companies are known as zombies because the company is alive and still doing business but has no real future. There are also zombie stocks. These are the stocks that never quite lived up to their potential. You invested them expecting certain results that never materialized. At some point, you need to cut these out and refocus on new opportunities or simply own more of the stocks that have been working. How to rebalance? I've alluded to this already, so to clarify, there are two forms of rebalancing. One is to periodically rebalance your portfolio to your original allocations. The second is to rebalance to new allocations. In the Trading 212 app, go to the pie in question. When you tap it, you land on the overview page. Next, go to the holdings page and scroll to the bottom. Here you see two options, Edit Pie and Rebalance. If you tap Edit Pie, you can move the sliders left and right to raise or lower the percentage of your funds invested into each asset, or add a new one, which after being added will default to a 10% allocation. Simply adjust the allocation of the new one and the existing holdings to get back to 100% for the whole pie. When you make the edits, a rebalancing is usually needed to get everything into place. And that's the one I really love. I love that my calculator remains happily left in my drawer, my Excel spreadsheet is joyfully untouched in its file folder because all the rebalancing is calculated automatically. When you tap Rebalance, the app shows you exactly how much of each stock needs to be bought and sold to get back to your chosen allocation. You tap Confirm Rebalancing, and once all the applicable stock markets are open for trading, the portfolio will be balanced again. Okay, I need to rebalance myself after all this talking, but what about you out there? Tell us how often you rebalance, and if you're still doing it manually, please tell us all why, because I will never be doing that again. And if you like this video, please make sure to smash the like button, subscribe, and hit the bell icon so that you see more videos like these as soon as they're released. Thank you for watching and happy investing.